Good morning. Welcome to Stock Market Today. It's Thursday, January 24th, 2019, a rainy Thursday here in New York. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. If you're on Stock Twits, I'm there as well under the same handle. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you can sign up for a free email. You'll be able to follow along with this show. You get daily stock ideas to consider, all delivered to your inbox before the market opens. So U.S. equities were mostly higher in Wednesday's trading, with the S&P 500 regaining some of Tuesday's losses. Consumer staples and utilities, two defensive groups, led, but so did technology. They also outperformed. The commodity sectors were the only sectors to finish lower. Treasuries were weaker across the curve. Dollar was stronger on the yen, but weaker against the euro. Gold finished little changed, and WTI crude settled down 70 basis points, but off the worst levels of the day. And as we get to the desk here this morning, futures are flat to up 10 basis points after finishing mostly higher yesterday. Asian markets mostly higher overnight, but Japan did lag. European markets are rising this morning. Treasuries are stronger with the curve flattening. The dollar is stronger on the major crosses. Gold down 40 basis points, and WTI crude is unchanged. And, we're going to keep running with this chart here, showing the key retracement levels, because I think they're important. I think the market is beginning to respect some of the key retracement levels as we've stalled out at the 50% retracement level of the move from the September highs to the December lows. That's at right around 2645, 2650. Above that, resistance then starts to come into play again around 2700. You can see there was this little cluster here. Up to 2735, 2740. That does encompass the 62% retracement level of the same move. RSI improving, but continues in bearish ranges, right? So we're looking for that momentum confirmation. The market can start to trade up and through these resistance levels, but momentum doesn't confirm. You have to treat the rally as suspect. But if momentum does start to confirm, that is your signal that this downtrend is changing, and you can get more aggressive on pullbacks. But for now, we're not seeing that. But one positive development is Chaikin money flow, which is strongly bullish off these moves. Right? Institutional investors seem to be coming to the market here for the time being. We'll see if that lasts. So no momentum confirmation just yet, but money flow improving, stalling out at the 50% retracement level. For me, I want to see these key support levels hold. So far in the near term, we are holding 2625, 2600. We kind of tested the middle of that range yesterday before rallying. So far, so good. But still expect a little bit of choppiness here in the near term, given the mixed signals on these indicators. Now, your market in a minute. What am I talking about? My note to Chaikin Analytics clients today. Positive earnings responses lead the Dow higher. It was really the Dow, in particular, the positive response to IBM's report yesterday that helped the outperformance of the Dow stocks. Financials are beginning to show positive relative strength. We've seen some solid responses to their earnings announcements. It's starting to show up now in our relative strength work. Long-term breadth metrics continue to improve. We'll take a look at that. But short-term readings remain overbought. Futures do point, as I said, to a slightly higher open here this morning. So power bars, a little bit of an improvement yesterday, but still skewed to the bearish side of the coin. 3 to 4 bulls to bears for the Dow, and here's your outperformance of 70 basis points yesterday. S&P 73 bulls, 122 bears. NASDAQ still giving a little bit back now. 16 bulls, 28 bears. Small caps actually finished lower on the day. 288 bullish or very bullish stocks there. 434 bearish or very bearish stocks. Slight downtick in bonds sends yields higher a little bit. And here's your consumer staples. Strong outperformer yesterday. And that's kind of interesting because staples are generally viewed as a defensive group. 7 bullish stocks, 10 bearish stocks. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bearish. Stock of the day today, something for you to consider, comes to us from the software and services group, which has been showing solid relative strength of late. Symantec has a very bullish rating. ticker symbol SYMC, closed at 1978, down 10 basis points yesterday. That bullish rating is due to very attractive financial metrics, very positive expert activity, and strong earnings performance, but the technicals just aren't there yet. Stock's been choppy, going sideways in kind of this $18 to $23 range really since last May. When we look at the rating here at the bottom of the screen, you can see that, we're on that very bullish rating. But market model, not really in agreement. We want to see this relative strength. What we're seeing here is kind of an inline performer against the market. We want to see relative strength improve. We want to see money flow improve while the stock maintains a position above the long-term trend line. Currently overbought as well, so I'd want to give that some time here. I think the best case scenario here is for the stock to continue to hold these levels, work off that overbought condition, and start to outperform the market. Then it becomes interesting. We're going to keep an eye on it because we're keeping an eye on a lot of the software stocks because the group has been holding up well. But there are better names in the software landscape to look at. Look at a name like Salesforce that we looked at the other day. Better names in the software space to look at than Symantec, but certainly don't want to completely disregard it. We'll keep an eye on it, not getting involved here and now. Sector tracker over the last few days is kind of interesting to me because over the last 5 days, the top two groups are staples and utilities. Defensive in nature. As the market kind of stalls out at that 50% retracement level, we're seeing defensive sectors start to outperform. Look at healthcare in the top 4 as well. Bottom of the list are your communication services, energy, and real estate. Tech and discretionary towards the bottom of the list as well. If you're bullish, you don't want to see that. Materials and fins in the middle of the pack, but we're going to take a closer look at the financials in just a moment. Our industry in focus today, Dow Jones REIT Services, which over the past 6 months has outperformed the S&P 500 by 3.26%, which kind of makes sense. REITs are defensive. They have dividends. Investors were coming to the REITs as the market was selling off, was one of the areas of the market that we said to favor, and that turned out to be the right call given this outperformance here over the past 6 months. But the power bar ratio, which measures future potential, is neutral. 16 bullish or very bullish stocks, 16 bearish or very bearish stocks. Currently ranked number 5 of the 21 subsectors we look at, and it has actually moved up 2 slots over the past week. As always, though, stock selection matters when you're looking at these neutral industry groups. We're going to take a look at some of the names here to avoid within the group. These are the names that have very bearish ratings. Vornado, VNO, Digital Realty, DLR, and Macerich, MAC. For those of you who read my Bearish Insights notes, you'll recognize Macerich was a name that we actually called out as a bearish idea, and that played out well for our clients. Now let's take a look at Vornado here. Very bearish stock with a weak trend. Here's that very bearish rating. It's been predominantly bearish since the October timeframe. Market and model in agreement here as the stock's been underperforming since mid-December with the intensity of underperformance increasing. Stock currently overbought. Rally here has produced a bullish Chaikin money flow reading, but and money flow has kind of not been a helpful tell here for the most part. But taking a weight of the evidence approach, we know that this is a name that we want to avoid. Stock is below a falling long-term trend line, and it triggered our relative strength breakdown signal today. So if you're long VNO, this is a good opportunity to get out of the position. If you're looking for opportunities to take trades to the bearish side, I think you can make an argument for opening a bearish put spread here or buying put options outright. Stocks trading in a resistance in the $66 to $68 area. Sell signal triggered, overbought, market and model in agreement. Weight of the evidence supports lower prices and continued underperformance for ticker symbol VNO. At the very least, you want to avoid it. Let's look at what's trending now. Yesterday's S&P 500 gainers and losers. Waters, EPS, stock up over 12.5%. Symphony Financial, their earnings were solid, up 10%. They're also selling their Walmart loan portfolio to Capital One. Investors did not like that. Sold Capital One off. IBM's earnings sent that stock higher, 8.5%. ARNC seeing a bit of a rebound after a sharp pullback the previous day when Apollo said they were no longer interested in buying them. Comcast had earnings. CMCSA up 5.5%. On the loser side of the board, some industry numbers around video games sent Take-Two down 7%. We touched on Cap One. They're buying that portfolio from Synchrony. Whirlpool initiated neutral from a sell-side shop. This has been a name that's just been a classic underperformer. It's what we've been referring to as a Chaikin classic bear and continues to do so. Qualcomm got a negative mention from a noted short seller that sent that stock down over 4.5%, and Intel's earnings sent that stock down 4.38%. And as we dig in and look at some of the surprises from yesterday, Progressive missed by 57 cents. UTX beat by 44 cents. There are those Synchrony numbers, and selling that loan portfolio juiced the stock a bit. Northern Trust continues a string of beats for the banks. Las Vegas Sands, LVS, been another name along with Wynn that we've been bearish on. They missed by 9 cents. Before the opening today, we're going to hear from FCX, is a bullish stock. Also hear from AAL, HBAN, Love, and UNP. Neutrally rated stocks before the opening. MKC and GWW report before the open. MKC trading lower. Granger GWW is trading higher. After the bell, we'll hear from Starbucks. SBUX has a bullish rating. Continue to hear from important financial names like DFS and E-Trade. Also going to hear from ISRG Healthcare, medtech company, high growth name. Western Digital, get a read on what some of the big tech names are saying. And then after the close, bearish stock NSC reports. Chaikin does suggest caution when holding bearish stocks ahead of earnings. So let's dive right in now. Financials showing signs of relative strength, and here's what we mean by that. XLF relative to the SPY, so the Financial Select Sector Spider Fund relative to the S&P 500 has staged a nice move off the lows here in late December on a relative basis. Became oversold. Indicator now making at least one higher low. That's interesting. Now we want to look for some overbought readings to indicate that the trend is changing. I don't think we're out of the woods yet, but given the responses that we're seeing to the earnings from some of the banks, I think it's important to take a look at some of the stronger names in the financials, especially as it pulls back. Still have a downtrend here. I want to see this line taken out on an absolute basis. And I think 27 is the key level because you can draw this line here. I'm trying to encompass that as well without crowding the chart. But the ratio does remain, below the downtrend line, below the 200-day moving average. So not out of the woods just yet, but showing signs of relative strength. And if we can get a break, I think that would be compelling. We'd want to start to consider buying very bullish and bullish financial stocks when they pull back to oversold conditions. So it's Thursday. I do breath work on Thursdays in my note to Chaikin Analytics clients, and long-term breath continues to improve. What we're looking at here is the percentage of stocks in the S&P 500 above their 200-day moving averages. 200-day moving average being a measure of long-term trend. And you can see here, it's really moving with the market, kind of with the ebbs and flows of the market. This metric is moving higher. What we want to see is a continued move higher and eventually a break of this 60% area. That would signal to us that a healthy majority of stocks are in long-term uptrends. We're not there yet, but we are improving. Look at how low we got as the market was bottoming down in here in December. So I'm going to continue to watch this for confirmation of moves in the market in both directions. However, what I will say is short-term breath is very overbought here. What we're looking at is the percentage of stocks in the S&P 500 above their 20-day moving averages, so very short-term in nature. And what you can see is these spikes towards 80 and higher have tended to coincide with local tops for the market. Currently, we are at 91%. 91% of the S&P 500 is above their respective 20-day moving averages. I do think that is overbought in the near term, especially if you put that in the context of the market reaching that key 50% retracement level. I wouldn't be surprised to see a bit of a pause or a pullback here. So something that we are going to continue to keep an eye on. But I think short term, we're overbought. Look for pullbacks. Look for the market to hold key support levels, work off some of the overbought conditions that we've seen, and then look for opportunities to add bullish and very bullish stocks to the portfolio when they themselves become oversold. So that's it for today. Head over to chaikinanalytics.com/today to sign up for the email. I'll see you back here tomorrow.